Welcome, G3 investors. This is Greg Gallagher. It is Tuesday morning, March 10th, and we're going to take a look at what happened to the market yesterday. And it was interesting, very, very interesting. Wearing my Australia hat this week. We got, since we've been doing YouTube videos since 2017, we have people from lots of different countries, and Australia was one of them. Okay. What happened yesterday? Well, this is what a heat map looks like when the market tanks. This was just an absolute down day. This is the first day that I've seen since 2008 where the market went limit down. What I mean by that is, I don't want that yet. Well, here, this shows the story. What I mean by that is the market went down 7% in the first half hour of trading. So the trading was halted for 15 minutes. So they said, I don't know exactly how that went, but it put the market in serious jeopardy. We're real close to a bear market here. You can see 7 to 9% losses on all the major indexes. The Russell actually entering a bear market at minus 21%. The NYSE, or the New York Stock Exchange, is getting really close. And I'm getting really close myself to calling this a bear market. The stuff tracked on FinViz for the 7,400 stocks, you can see advancing stocks were 5.7%. Of 7,400 stocks, only 5.7% were advancing. 93% were declining. That is not good. Only 10.5% of the stocks that they track were above their 50-day moving average, and only 17% were above their 200-day moving average. That, my dear friends, is not good. So, I want people to remember. I'm going to refresh your memory on this chart right here. We brought this up time and again. Markets go up and down, and we've had a really nice long run in this market. And my question is this a market top? Well, I thought it was a top here. I thought it was one here. But when you keep making higher highs and you have this sort of euphoric move here, you're not ready to call it bottom or a bear market or a market top yet. But that little drop right there, let me show you what that looks like on a market psychology chart that I did a long time ago. Now, I know this is a tough chart to follow, okay, but it basically looks at the bear market of 2000 to 2003, the so-called dot-com crash, okay, and we're looking at the NASDAQ index from 1996 to 2003, and you can see the same sort of pattern, but the difference is when it went down here, it's going to make a retracement, and this market is going to do the same thing. The big question is this the first side of the drop on the mountain? And they're going to climb back up, and if fear kicks in, you're going to see another bear market. So we're not quite at that stage yet. I'm not ready to call that, but we could be getting close. So, yeah, this is live. Oh, cool. Okay, I thought I'd do some live work here since I apologize. I had computer problems this morning. I couldn't get my report out early enough before the market opened. Okay, bull market. And then right here, that is the day we got out. Okay, we exited all of our positions. And, 1, 2, 3, even 4 or 5. It went below the last 5 or 6 trading days. So it took us out of everything. Every ETF we had that was long, it took us out. And look what happened. Look at the volume. Massive volume. Big volume. Look at all this low volume here. Look at this volume. Okay. Now everybody trades this ETF. It's the QQ Series Trust. The blue line is the 50-day. And when it drops and stays below the 50-day, I'm ready to short the market. And that's what it did. So we started shorting the market. And we've made money, as in our last report, made lots of money. Okay, so it's really a good thing. So the only thing I'm going to do at this point in time, now this is a daily, this is a 10-minute chart, okay, of the same thing we just looked at, the QQQ. There it is, 1 year. There it is today. This is what I use to trade from, okay, when I'm trading. But I'm not interested in buying the Qs. I want to buy the SQ. Oops, I think I hit too many Qs there. Yeah, there we go. So why would I do that? Well, let's look at what we did yesterday. Okay, as you know, we didn't go long over the weekend in an inverse ETF because that's against our rules. So it was way up here. I'm not going to buy it up here. I mean, when the market drops 7%, I'm betting it's going to correct a little bit. And sure enough, it did. And when it did, and it got back up here, I think we bought it at 25.20. Okay, so we got back in, and then we held. We didn't make. I think we made $420 on the trade, but we got out at 26 something. I forget what it was. We only bought 600 shares. Now, at the end of the day, it did this. Well, why didn't I get back in? Because I'm not expecting the market to go up down that much. Once it's had a big reversal, I'm expecting it to open back up. So let's go back to the Qs a minute and see what it's doing, what it did, and what it's doing. It did. It opened up here. But look, it hasn't been able to hold it. And so as it starts to fail here, right away, it starts to fail. I'm like, I expect it to fail. They're going to, when you're in bearish territory, the reactions are huge and they're swift. And so you're still trading the same thing, but you have to trade a lot quicker. And if you can't do that, it's no big deal. This is an educational website. We're here to teach you how we do it. So what did I do? Well, I watched what happened in the futures. I didn't stay up all night. I don't do that. I got up this morning, probably around 6 or 7 o'clock, and I watched what was happening to the futures. And look, this looks like a bottom to me. And hey, look, it crossed our red line there. That's the 20 period moving average, simple moving average on a 10-minute chart. So if I'm trading something for the day or a day or two, that's the chart I use. And I just said to myself, hey, look, if this thing gets out of here, and, it doesn't go down, I'm going to get in it. So we did. We got in it. I took a position. And I set, this is harder to see, but I had to set my stop way below this line. So I set my stop down in here somewhere. And so I got in, and look what happened. Here we are. We're off to the races again. What does that mean? Well, earlier this morning, the market was down. The market was up 900 points. Now we're up 74 points. Okay, so hey, we're making out, quote unquote, like bandits, and that's a good thing, right? It is to me. Okay, so what happened to our results? Okay, our last report in February, we had gained 11.5%. We had crushed the market over this period of time. This is updated now. Now we're up 17.8%. Okay, and we're absolutely crushing the market. I don't even think I've updated these. These are from the last report. So it's much worse than that. I think if I go, it doesn't matter. Okay, so my point is, this is the type of market where you want to be learning before we get into a much rougher bear market. You want to learn how to trade. And the way to do that is to become a patron, especially if you're a trader already. Help others enjoy the benefits of trading ETFs. So copy this link into your browser. And if you do that, you should get something. Let me see if I can find it here. It looks like that. There, I copied the link into my browser. And there it is. So for just $5 a month, that's a cup of coffee and a donut. You can start getting these reports for me periodically, at least weekly, and of course monthly. And when something happens like yesterday, you get the report. And we can spread this news. This is Greg Gallagher with G3 Investors. Good trading.